What's happening with the Dow Jones Industrial Average performing much better than other US benchmark indices? Is its outperformance telling us that the other indices might resolve higher in the coming month? In this video, you will discover through technical analysis that its pole position is basically a function of international capital flows. Four technical dynamics can be used as forward-looking signals that the Dow might continue evolving higher. We also want to keep an eye on those dynamics for a potential invalidation of this, so that we keep the flexibility to change direction, limit the risks on a long position, or even initiate a short trade. Hi, I'm Gonçalo Moreira, and this channel I provide you with technical views on different markets, be it stocks, commodities, crypto or forex, to deliver key actionable price levels, bullish and bearish ratings, and also timing clues, when to expect the market to change its direction, accelerate, achieve a target, and so forth. Among the four technical dynamics we are looking at, there are clear messages given by the magnitude and technical context of the current correction in the index that show the market is far from accepting the narratives of a liquidity crisis like in 1987 or a financial crisis like in 2008. The second dynamic is a clear upside breakout on the Dow that opens the door for the all-time high to be reconquered and even an exploration of the 40,000s. Moreover, as a reaction to the recent news on the Fed monetary policy, the market has staged a pullback on the broken resistance, flipping it in support and pointing to an upside continuation. We will look at the charts in more detail to shed more light on these two dynamics. We are also going to look at intraday charts to provide you with two potential scenarios of how the Dow might evolve from here, so you can use it if you are planning to add or exit a long-term position trade, or if you are a short-term trader looking for clear price zones where to enter and exit the market. I'll provide you with specific price targets and risk protection levels. As a measure of internal strength, we're going to take a look at the RSI levels as well. And finally, and that is perhaps the least used study among technicians, we are going to do some currency translation for the benefit of those of you that are trading US indices based on foreign currencies. So let's jump into it. The monthly chart helps us to put things into perspective before we visit lower timeframes. As we can see here, we are not trading at euphoric levels corresponding to the upper part of this secular bullish channel, although we can't exclude a vertical market like the one before the 1930 crash, since we have been very close to entering that area in late 2021. On the other side, we are not at depressed levels either. Not even in March 2020 did we get to break into the 2009 lows. Following the ascending support established by the 1987 lows, we acknowledge that the 2009 crash was halted at the same dynamic support, and by moving closer to today's price action, we see that even in 2020 the market rejected a higher interim support line of this mega channel. And moving even closer to today, the correction we have witnessed so far in 2022 by no means comes close to these two dynamic supports. This is what technicals are telling us, and also something we want to pay attention to as we move into 2023, because if any of those dynamic levels becomes a natural price target as a result of a reversal pattern, a Fibonacci extension, or any other target measuring technique, immediately we start accepting the idea that something more serious is about to happen on the macrosphere. As technicians, we read what the market is telling us, accepting the fact that markets usually discount future scenarios many steps ahead of what textbook explanations would teach us to do. Looking at the weekly level, in my view, longs are preferred now as the Dow Jones trades above a downtrend line from the 2021 highs. Notice the blue line channels. This is the structure that will guide us down to the daily charts. By the way, all the RSI measures from monthly to daily are tracking above their median lines, the monthly having even reversed higher before reaching the oversold thresholds. These are all signs of strength. Now let's switch to the daily chart. Now, while the SP500 has a larger catalog of companies and therefore provides a better picture of the domestic US economy, and the Nasdaq represents the speculative tech-oriented retail money, the Dow Jones Industrials represents big international capital. These are the blue chips, right? And because this index is so heavily invested by big global investors and so sensitive to currency fluctuations, there are a few other charts that we have to look at every time we look at the Dow. But before we jump charts here, let's go deeper into the intraday timeframes so that you can get a few price levels to work with. The 8-hour chart might present a buying opportunity if the index stays above the descending green support and the ascending interim yellow support. Upside targets for such a commitment are found at the uptrend line at 35,800 as we speak, followed by a potential to reach the all-time high at 37,000. If that is accomplished, we'll still have two more targets to work with: the ascending resistance close to 39K, and finally the green secular resistance above the 40K, a potential 22% gain. Any of the yellow ascending uptrend lines could be used to trail stops and protect downside risk. And if the market hurdles the blue uptrend line, this could be also used as a less aggressive angle to trail a stop. On the other side, a good place for bears to get positioned is any downside break below the descending green support, currently at 33,000. Provisional downside targets are 29,500, the first horizontal support, followed by the green channel's lower border, currently in the 27,000s. And finally, the blue ascending support close to 25K. This ultimate target would accomplish a minus 30% correction from the all-time high and would be considered a normal correction within a major bull market. Now, I want to give you a couple of key dates when to expect the Dow to take more column inches in the news. The two closest line intersections we see on the chart refer to the month of December 2022. This could emerge as another pullback to support or a reversal below the interim blue uptrend line. Any of these dates could host a reversal of fortune for the Dow during December. The next time clusters to pay attention to point to the end of December and the start of January 2023, where the Dow could eventually achieve an all-time high again. More into the future, time clues emerge in February and again in May 2023. Notice the intersection in May is made by two important lines, hence spring 2023 could be a time of big shifts in stocks. As I said at the beginning of this video, there is a fourth dynamic playing out, and it has to do with currency markets. To analyze the Dow Jones from a global perspective, we have to perform some currency normalization or currency translation. This is done employing a relative strength study that consists of dividing the index by an exchange rate expressed in USD, that is, where the dollar is on the quote side of the pairing. This is the Dow Jones priced in euro terms. As you can see, for European investors, the Dow has broken the all-time high made in the Dow in December 2021 in dollar terms already in August, and it is now close to achieving a new all-time high. A similar picture for Japanese investors enjoying a 10% gain above the December 2021 high in dollar terms. And also sterling-based investors are exploring new highs with their holdings of American blue chips. Not to speak of those investors based on currencies like the Turkish lira, who have witnessed an astonishing 450% gain in the DOW in lira terms since the March 2020 lows, compared to American investors who have seen appreciation of 90% in the index. Now that you have seen how to create currency translated charts on the TradingView platform, in the description box I leave you with the same formulas I used today, so you just need to copy paste them to construct those same charts. In a future episode I will explain how an open position in the DOW might be affected by currency fluctuation if you have a position running on the DOW and you are accounting in euro, for example. Before we wrap up, I would appreciate if you could hit the like button to help pump this content out into the YouTube algorithm and spread that technical analysis knowledge, as well as leave a comment below with your feedback on this video and what other markets would you like to see covered. Wrapping up, my bias is to the upside, with some degree of caution during the month of December, with targets starting at 35,800 up to 40k. On the downside, a 30% correction becomes possible if we lose the aforementioned supports. Key dates ahead are clustered in December, beginning of January, and later in spring 2023, where a major shift or target in the Dow could be making headlines. We also saw plenty of strength when looking at the Dow Jones Industrials on an international basis through currency translation. As a final note, we can use the Dow to infer whether the US dollar might be heading. There is a recent video where I covered the dollar index and another one where we compare the performance of gold to the Dow Jones. Links are in the description below. That's all I got for you folks today. See you in the next video.